Morning Discord, morning YouTube. Let's get into it. All right, quick mic check. Mic check, mic check. All right, cool. I'm mainly thinking about the YouTube. Let me see if YouTube is... Okay, yeah, YouTube has volume, but it's kind of low. Let me put it up just a tad. Mic check, mic check. Okay, we'll leave it there. Mic check, mic check. Okay, let's get into it. If it's too quiet, someone needs to send me a message and I'll raise the volume. Okay, so we have the 5 nearby. So today is quadruple witching, which is when all the options expire. So sometimes the stock market nerds like to make it a thing. Triple witching or quadruple witching, whatever it is today. Okay, let's see what we got. You know what, Discord? Let's I wanted to try an experiment. I want to see if we try the 2-minute candles instead, if we are able to hold and maybe find better entries, more secure entries. What do you guys think about if we use 2-minute candle today? Just to try it. Today's Friday. Quadruple witching. I see a couple reasons why we should maybe today would be a good day to do some experimentation. Alright, we'll do it. We'll try it. I mean, literally it shouldn't change too much, right? Not too much should be changed, but right, because the price is going to be the price no matter what. So it's in 2-minute candle now. So let's see if the 2-minute helps us out a little bit as far as maybe holding a lit, you know, that maybe 1 or 2 minutes longer to confirm an entry, or 1 or 2 minutes longer to stay in the trade. So we'll see if that works. So right now, let's say if we were to take this put and hope to get to the 5, we're going to test the theory. Let's see if this 2-minute would make us hold a little bit longer if we were to go in right now. So I'm gonna get the paper trade. Okay, if you're just joining, we decided to, on the Discord, we're gonna do an experiment today. We're gonna try the 2-minute candles to see if that gives us some help. Because you see how like technically it still hasn't. So this maroon, whatever this color is here, I just put this here for this morning. So we'll give it a second. We'll see if it's gonna play out for today. We're seeing if we can use this for today. And so far, 2-minute candles, yeah. Because we're really getting no indication to get out of the trade. So we'll see if the 2-minute candles work. Yeah, we're testing to see if the 5 is going to be our target. Let's see if we close below this maroon here. I'm going to check the 5-minute. On the 5-minute, it says we might be starting a bear cycle. And we'll mark out... Okay, I marked it out here. Yeah, so we'll see if we if it wants to close this cup at 660.39. So yeah, as far as that experimental put we're in. Let's see what we got. Yeah, it's in profit. It's in profit, so we're seeing if this 2-minute candle is going to help us out. See, even if we were just to like blindly take the trade just based on what the setup is now, yeah, it would have been working. So today, yeah, I think it's a good day to experiment. You got nothing to lose, right? We can only gain. This can only help us. Now let's see if this is a retest of this maroon. So now that contract, okay, no, never mind, it's in profit. Yeah, we'll just wait, we'll just be patient. This is our experiment, so we got nothing to lose. We're experimenting today. We're retesting this maroon. We'll see if we reject off and get to the 5. So here's the thing, the contract's been in profit all this time. So it's like, we had all this time to protect our trade. So if it goes against you, it goes against you, right? So that's why it's a good idea to put a reasonable stop loss. So so it doesn't, you don't allow your contracts that are in profit to go against you. Yeah, if it's already in profit, then why would you let it go against you? Just take your profit. If you get stopped out, you can always get back in. I'm talking about your entry. If you're entering and it goes against you like kind of immediately, yeah, but if it goes in profit, take the profit. Collect something. Let's see if it creates a bolt. Let's look for a bolt. I think I might even like the 2-minute because it's like way less stress. It's like way less stress. Yeah, that contract is in profit. The experimental put that we bought randomly just to test it, it's in profit. So we can collect our profit now or let this whole MACD play out, right? The 2-minute candles seem to be doing okay. Because I feel less twitchy about it, because it's moving a lot slower. I feel like you can control it better. What do you guys think? Look how nice and controlled and slowly it's moving. Oh, so you did try the Heikinashi. Has it been helping? The 2-minute and the Heikinashi? Lee? I'm interested to know, has that actually helped? Because I know I made that suggestion a little while ago, maybe a couple weeks ago. Yeah, see, this is great because I can protect this trade and not even worry. So if it goes against me, no big deal. But either way, we're experimenting today, so. Okay, good. I'm glad that suggestion helped. I think it helps because it makes you less twitchy on the trigger to either buy or sell. I think that's what it does. Okay, so we see our range. Let's make this 5. Let's put this our range for the day. So the range for the day is on the 5-minute. Good example. See, so this is an experiment, so we don't really, it doesn't really matter. But what I'm saying is, look, if you're thinking puts and you're thinking the break of this maroon, then if you enter on maroon, when it gets in profit comfortably, at least one candle, you can move your stop. And if it goes against you, then it goes against you. You might get an opportunity to get back in if it rejects what is this, 62.18. So if it rejects under here, let's see what happens. If you're just tuning in, today's an experimental day for our Discord, so trade light. Let's see if we reject here. Let's just be patient. Let's give it time. We're still... All right, now we just hit our 15-minute time frame. So now let's get going. Let's see what we got. Yeah, we don't want to get chopped up in a range today. We don't want to get chopped up in this 5-minute range. Check our 30-minute. Okay, yeah, we're still in the range in the 30-minute, in the pink range in the 30-minute. On the 30-minute, we are below the water, but it looks like we might be starting a bull cycle, so we'll see how this bull cycle goes. If it's a weak bull cycle, we'll expect some downward pressure. But if this bull cycle plays out, then we'll look to maybe take calls above the pink. So we'll know exactly what's going to happen. I heard the message. Give me 1 second. I'll be right there. Okay. All right. So remember, we wanted to see if we're going to reject underneath this 62. Now we're below the water. All right, so let's see which one takes over, if we start trading in purple or if we start getting above back into this magenta. So it looks like we might be forming a lick box here. We gotta let this play out. We don't know if this is a lick box yet. We'll see if it breaks below this box. So remember the first call out, we wanted to see if we're gonna hit the 5 like this. So we're seeing if this is gonna play out. Just be patient. We'll see what happens in this liquidity box, if it drops below or if it bounces right off. You see where the support is, right? So if it breaks this little support, it's pretty much like a micro. We want to look for a micro inverse cup and handle here, something like that, right? This will tell us the direction. This little micro move right here. Ideally, right? In an ideal world, that's what will happen. The 5 does look juicy though. It would make sense to hit the 5. It's right there within profit target. So we'll see. We'll see what they want to do. So here's the thing. Let's say market opens up. You see the 5 right there. It looks good for a put. There's nothing wrong with making the assumption that the market wants to test the 5 because you know that's where the liquidity is. So this is a good thesis to have. If it doesn't work, it doesn't mean you're a bad trader or you know the market's against you. It just means that it was a good thesis that you had, right? To test the 5. So it's not a bad idea. You just gotta wait for the setup. Make sure the microstructure's there. You see how we gotta be patient. Let's wait for this to break, right? Let's be patient. Let's see if we get and we're also gotta test to see what our ups and downs are for the day. So Okay, so far with the experiment, we bought the random put. We waited till it got into profit. We put our stop loss. So we took, I don't know, a couple dollars on this little thing because I put my stop loss. When I went above here, I bought the call. So I'm still in it. So we'll see what happens. I have my, I got in, I don't know, probably somewhere high up in this candle when it retraced. So after this one, and then it retraced back into it. So probably somewhere around here. So I have my stop. Because I got a late fill, I have my stop at 62.18. This is all experiment, right? This isn't actual trading. So remember, we're trying a new 2-minute setup. This is all an experiment. This is all just an experiment to see if we like the 2-minute better, to see if we get better results. We need to at least let it run a whole, a full session to see if we like it. So this one here, this call I'm not gonna stop out yet because it's not in enough profit, right? Because I got a late fill, so I have to let this one play out. So if this one goes against because of the late fill, I'm gonna have to take the loss. I'll put the stop probably right on this red wick right here, somewhere around this red wick, a little bit inside the red wick. That's where I'll put the stop on this call. I mean, even though technically it should be under here, right? But we'll see if it gets above the water here. All right, Discord members, look at your trading plan. The trading plan today was very simple. Very simple. You know, normally I have a couple of different plays up there. Today was very simple. It's Friday. You know how I feel about Friday. Did everyone get a chance to read that witching thing that I put in there? Just for some stock market knowledge. So the witching, I don't know, they have like some folklore about it, and oh, on this day this stuff happens, and well, you know, whatever they're talking about. So we're hoping that maybe we get like a, let's see if the microstructure plays out for, hold on, let me clear this real quick. Let's see if the microstructure plays out for a little cup handle up. So once we get past a certain level, I'd say probably this dotted line. Because at a certain point, if it goes too low, right, this is no longer the structure. We're at market open, so if you didn't take any trades, good for you. And this is why we usually wait 15, you know, well, we always wait 15 minutes because we need to see some type of direction, right? So this is a good example of why we usually wait 15 minutes, because we need some type of direction. We need to see, I don't know, the move up or down, something. We need to see some direction. Otherwise, we're just speculating what's going to happen. We need that open volley to give us some type of something. So we need, like, you know, a wave. We need at least one wave. Is the wave going up? Is the wave going down? We need one wave at least. If it breaks too low, then this is no longer valid, right? Okay, so listen up to the process, right? When we come to the trading floor, we gotta wait. At least we need data, right? We need data to see what direction. If we jump in immediately, we don't have any direction. We can't even guess at a direction. So on the trading floor, we gotta wait for some direction. We need to have maybe a pullback somewhere to show continuation, or a pullback to show a head forming, but we need some type of direction, right? So when you're doing this, you got no direction. First 15 minutes, you can't see anything really, normally. Okay, so we're at the zero line, we're completely sideways, MACD is trending up, the signal line's pointing down. This means we're going sideways. When they're both pointing in the same direction, we'll have direction then. We're above the water. Let's see if the legs spread apart here. Just be patient. We're sideways, right? Sideways. There's no movement here. We got nothing to jump at. I'm probably gonna remake. I'm probably gotta remake one of these algos. We'll see. I think this pre-market's messing me up. I'm gonna remove this one for right now. I'll remove it for right now. I think that the pre-market algo was messing me up, and I told myself not to use it, but my eyes kept getting drawn to it. I had to take it out. Yeah, the 5 minute might be solid. If you look at the 5 minute, it kind of looks like it wants to play out. So we'll see. We'll see. We want to make sure we're not just trapped in this, maybe this evil wedge that might be forming between. I know it looks like really juicy right now, so we just got to be patient. This is the thing. We don't know. We don't know. So the question is, are we in this blue? Are we just going to hit the blue and reject? Or are we going to break out of the blue? We don't know. We don't know yet. About to find out though. So we're gonna see if this cup and handle is gonna play out, or if this is gonna be this right here. About to find out. Do you see why we like data? Now that the data's here, do you understand why the data is important now? Do you see why the data is important? Why we needed to wait? Our normal time frame that we wait. This is why. The more data you get, it just gets easier. You need to have the data. So we'll know exactly what's going to happen, if we're going to break above or if we're just going to continue in blue. This is why we need data. Now you see the liquidity box? We're trading on the lower side. Now we're trading on the upper side. So let's see if we break this upper side, right? So originally I was like, let's put the stop on this on the what is it? On this wick. And then I was like, technically we should be where? Underneath the last low. That's technically where our stop should have been. But okay. So we have to see if we break above this now. Let's see. Now we are above the water. So let's see if we can stay above this key level here. Excuse me. And then we're gonna see if we can find our down for the day. Okay, now everything's starting to shape up. Now we have something to work with here. Let's see if this green holds up. We got plenty of liquidity in this liquidity box. You see the wedge between blue and green maybe? This is why we wait for data. This right here is why we wait for the data. So maybe a wedge between blue and green. Let me, just to highlight the wedge. So we'll know if we're gonna continue in blue or if we break blue. This is why we need data. And then, look, if we do stay in blue, this is what you gotta watch out for. This is why we need data. Everything gets easier with data. Now we got to see, now we're above the water, we got to see if the legs spread apart again. If the legs start to spread apart again right on green, that means green's holding up. So remember, I haven't tested the green yet. This is just my estimation. I don't know if green's a thing. I got to wait to see. So just be patient. Look, you see how the market tells us the direction? We just need time. We haven't confirmed the blue or the green, so we got to be patient. Right? We haven't confirmed anything yet. Blue or green. So once we get a confirmation, then we'll know. So just be patient. Now we're above the water, but yeah, we're literally just in the middle of liquidity. We're back at market open, so we'll see what the market wants to do. We need like a uptrending bear cycle or a really, or the legs need to spread. Technically they haven't closed yet. Technically it's still a little tiny gap. Spread them. Now, the thing about, let's say you're above the water and you start your bear cycle, bear cycles can actually trend up. So this is what you have to be cautious of. Just because you starting your bear cycle, let's say it does cross right now, it doesn't mean it necessarily has to trade down, because remember what I told you, the orange line, if we're above the 0 line, this has more strength. The orange line actually has more strength, in my estimation, right? This is the current. This is where you get, the current's gonna sweep you. So if the current is heading up and your blue is heading up, the blue's gonna go up faster. If the blue's heading down but the current's heading up, it's going sideways. It's telling you that it's a sideways or a pause. So you see how it's dancing right on green. So I think we might hold on to this green for the day. We might hold on to the green. We need to verify that when green breaks, that it gives us a significant drop. You know, hopefully, you know, it works its way down to blue. So if it's going to be break a green for our down, we want to see a significant drop here. So the reason why it's important to wait for data besides the obvious is because so you can get a visualization. We had no idea. We couldn't even make a thesis at this point, except for, well, it looks like it's in a bear cycle, so go with the bear. Basically going off of, oh, I see a red candle, right? We don't trade like that. We need to look for momentum. We don't know where the momentum's building. All right, so look, you see kind of how you have maybe a lick box down here and then one above, maybe. Kind of see it? So if we start trading above this to the tall side, maybe give you some indication. We need to get back above 62.18. You know, we're thinking that maybe this support line is our elbow for the handle. That's what we're hoping. So we'll see right here what happens, and then I might need to refine green. So if this breaks green and shoots down, then it's going to be green, right? If it doesn't, then I need to redo green. So green is just my, you know, something that I saw, and I'm going to see if it works. I don't know yet. We need to test it. I think the angle might actually be like that. Let me see if I like it. I think this is the actual angle here. So now that we've had an opportunity to test Well, we're gonna wait to see. We need to see if we got the opportunity to test, and then now that we got the test, now we know what we're looking for. So let's just be patient. All right, we're testing green. Okay, break a purple on the 5. There you go. Thank you. Jeez. Okay, good catch. Good catch, Lee. So this blue... Okay, so these two blues line up. And purple and green line up. All right, we got it. I should probably just make green purple. Yeah, I'll just make it purple to match up. And then I'll put the purple. Green. Okay, sorry I changed up the colors, but I'm just trying to make it consistent with our 5. Okay, so if we were to take the break of this purple now, because we're just lining up purple with purple, so that's all we just did right here. Man, this really faked me out. Let's see if it, yeah. Let's see if this is the break. Maybe this green was the retest, and let's see if this is gonna be the reject. Okay, so we're gonna say maybe break a purple. All right, so I think I like purple and blue. Also, okay, one more thing for the Discord that I want to talk about. We need to discuss, because I always have this dilemma of when I should call a play or a trade a win. And I don't have a real criteria to say whether this is a win or not. So I decided that I think if we can get from the break of whatever the color is, from the break of the color, if we can get 30 cents out of it, I think that's enough time to protect your trade while not getting charged fees. So I think if it goes 30 cents in a direction, I know it doesn't seem like a lot, but it is enough to protect your trade. So I'm going to put a 30 cent, you know, if we can get 30 cents, that should be enough to protect the trade. So from now on, if it goes into, you're able to protect it without fees, then I'll count it for the wins. Because any trade that you don't take and you don't lose, that's a win. If you didn't lose, that's a win. So this break of this purple is going to tell us if we're going to stay inside this blue or not, or if I need to readjust the purple. We're going to see. Let's let it play out. That's why we need data. There might be a half channel forming here. All right, look, we need to see if this was a test of this liquidity. So it broke up, retest this liquidity to break above. That's what we're testing to see if that's what's happening right now. Or if we're gonna So if we break above, it should look like this, like that, and like that. If we, excuse me, hold on. If we break below, we're gonna see rejection under here. So we should have seen rejection here underneath this. You see this line right here? I wanted to see it reject underneath this liquidity box, so we're just going sideways. Literally at market open, nothing to do here. We're just in blue. We're in blue until we're not. That's the answer. And we're waiting to see this gosh darn cup and handle play out. But it starts rejecting under here, then we'll think the other way. So we're sideways. So it's fair to say you got a 50-50 shot. Yeah, you got a 50-50 shot no matter where you go. Because both of these are still in play. We're chopping sideways. Set alerts on pink on your 5. Man, it looks like it wants to play out this cup and handle, but it's just trending down in blue, so. Trade light, there's nothing to do here. Fridays, yeah, exactly. So, man, I'm telling you, this cup and handle looks like it wants to play out so bad, but I just see we're in a wedge. Maybe a secondary liquidity here. Okay, we're back at opening. We've gone nowhere. Fridays. Okay. Let's see if this. So maybe we had a weak bear cycle here. So let's see if this weak bear cycle finishes our handle. Let's see if we can get a bull cycle to finish this handle off. 5 minutes says we're going sideways. 30 minutes says we're below the water, but in the bull cycle, so sideways. Sideways on the 1 minute. We're sideways. I'll be right back. Don't overtrade. Set alerts. That's why I told you guys, paper trade. Paper trade today. This is just the experiment. We're still in our pink range. Still in our pink range. Yeah, we've gone nowhere. I'm going to take a little break. I'll be right back. Don't overtrade. Okay, might be a little orange wedge right here. All right, let's take a bet. Is it gonna go up or down? Up or down, bets. Dang, everyone went opposite of me. I was thinking up. Oh man. We're literally just guessing, so it doesn't matter. Lee, I thought we're supposed to be paper trading today. What? Okay, you guys are... Okay. All right. Let's see. Come on, Lee. Now I need you to win, so I want these puts to win for you. What, you got in here? Okay, so you should maybe be back to broke even, I'm assuming. Or maybe a little bit of profit. The first up here? Or are you saying before I move the line? Are you saying before I move the line? Oh, okay, up there. All right, good. This is, man. Don't overstay your welcome. You see where the liquidity is built up. Man. what's gonna happen? So it just pushed below the water right here, but it's maybe starting the bull cycle? Sideways, right? You know what? I think maybe I have the up bias because the market started down. I think maybe that's why. Because we started down, right? It pushed down, so maybe grab liquidity for the push up. That's probably why I have that bias. But, I mean, it just looks like we're in blue. So we're in blue until we're not. That's the answer. I mean, it looks like it wants to push up. You see where the liquidity is building. Looks like it's building to the upside. Well, of this blue. So we need to see it fade this way now. We need to see it fade up if it's going to go up. Let's look at our 5-minute. Yeah, the 5-minute kind of still has our this ugly ass handle intact. Yeah, the 5-minute still got it intact. This was, there's nothing you can do here. It's sideways, right? If you took a call or a put, you're equally as right as everyone else because we're sideways. This is how I like to view the cup and handle. The cup and handle to me is that, which it's, I'm going to say this and it's not playing out the way I'm going to say, but this is how I view it anyway, so I don't mind being wrong right here. That you see the strong angle, the down, the up. This tells me we just stopped everybody out, and then the handle is settling out the orders. Right? Now we're settling out the orders and the bulls win because all these got stopped out, right? So all these got stopped out on this move up, so they lose. Now they have to settle out their orders up, but that's not happening right now, so that's how I like to think about it. Oh, Lee, I really want this put to work out for you. Well, luckily we're still in vicinity, so I know your stop loss can't be crazy. Or no, whatever the loss is isn't going to be crazy if it does go against you. But we are below the water, and we just had maybe a weak bull cycle. Maybe this was like a, hard to know, it's too close, I can't really see up in there. Wait, did she leave? Okay. I think she's probably still monitoring, but she just stepped away. Oh, it's about to hit for her. It's about to hit. Come on, I really want her to win. Okay, she should be in profit now. She should be in profit. Yeah, her put's hitting now. Now she should at least be able to break even. Depending on where she got in. If she got in on this one, she should be right at break even. Okay, let's see if we retest this candle right down here. Okay. All right, there you go, Lee. All right, Lee. Hell yeah. All right, everyone who had the put bias, good job. Good job. Okay, there it is. So break a purple. It was highlighted here. Break a purple hit. So this is, yeah, I have to count this as a win, right? Because this is, you on the break of purple, you had a chance. Look, break of purple, retest, break, retest, reject. Perfect. Everything we talk about. Lee, good for you. You follow the strategy 100%, and now you're winning. You didn't allow the pullback to scare you. There you go. Good job, Lee. Good job. Look at the money. Break a purple. We called it. Break a purple. Good job, Lee. Oh, look at the money she's printing right now. Look at the money she's printing. Good job. Yeah, once this attempt right here failed, I should have gave up on that. My bias for the handle should have stopped right there once this attempt failed. But I still had that bias because of this. But Discord members, good for you. You follow the strategy. It was break a purple, right? We have it highlighted confidence level 2 because we were testing it. But confidence level 2 is still a good confidence level. So break a purple. Bob's your uncle. Good trade. Good job to the Discord members who took that put, who followed the strategy. You followed the strategy to a T, and it worked out. There you go. Look at Lee. Lee's printing money right now. Lee, good job. You follow the strategy. Look at you. All right. Make sure I hope you're protecting this trade, Lee. You better be protecting this trade. So just to keep everyone abreast of what's happening, we are doing an experimental day today. We're using a 2-minute chart because we normally do the 1-minute chart. we called out the break of purple for puts, and we actually have one of the Discord members who is still trading actual real money, and she followed the strategy. Good for her. Good for her. Good win. Good win. Now take your win and call it a day, right? Don't sit here and gamble this money away. I know you went through some pain. I know you went through the pain over here. But you followed the strategy and it worked, so good for you. You break a purple. Your last high was right here. So, you know, that's a reasonable stop loss. That's actually a perfect stop loss. That's a very reasonable stop loss. And it never tested your stop. You stuck to the strategy. And look at the money you're printing right now, Lee. Good job. Look at the money. There it is. Break a purple. Broke our wedge. All right. Let me clean up the chart. Good job. So the call entry was on the break of blue. The put entry was on the break of this purple. We even had a secondary liquidity to identify another break of purple. So this is a win. This is going in the win column. Look at the money that printed from purple. Look at the money. Look at the money that printed from purple. Good job, Discord. Good job. And it's still printing. Don't get greedy. Don't get greedy. Because now it looks like we're closing this. Look, this little cup right here. See the cup closed? Now let's expect that. You know, hopefully it goes straight to the 5. But if it does a little dance right here, don't be surprised, right? Because the cup closed. See the cup right here? Cup closed. So don't be surprised for a dance. Always know what to expect. So let's say you're in this trade and you want it to hit the 5, but you know it's possible that the cup close is going to bounce. Then you know maybe you got to ease up on your stop a little bit if you want to collect all the way to the 5. If that's if you're betting on that, then you know you got to ease up on your stop, allow this little bounce to happen, right? And then once it settles out, you move your stop again. Or it goes straight to your target and you don't have to worry about that at all. Easy money. Oh, Lee, you had a great week this week. I'm not sure, but I think you had a 100% week for the day. I'm not saying all your trades worked, but I'm pretty sure you were green every day of the week, which is what we want, right? Green. Green by the end of the day is what we care about. Look at the money on the break of purple. Even though I didn't take this trade, I still feel victory, right? Because all the Discord members, look at the money. This is a good trade. And I think the 2-minute chart is probably, it seems like even less stress. What do you guys think about the 2-minute chart? I kind of like it. Look to the 5. To the 5. Let's go. All right, we tested bottom blue. Let's see if we bounce on bottom blue. Okay, so if here, 2 things are going to happen. I'm going to clean up this chart. If you decide you're going to be degenerate in trade, 2 things are going to happen. It's either going to maybe something like that, or from this point here, your puts have to be under the 5. So whenever the 5 whenever we break, retest, reject, the 5. Okay, and that's the answer. So look for calls somewhere above 62 for safety. If you want safety, somewhere above 62. Because we want to know we took out this lick box here. All right, so look. Look how easy this is going to be. Now that we have data, it's going to be easy. I told you, expect a bounce. Somewhere's going to be a bounce, right? Maybe on the bottom of blue. Maybe on the bottom of, so you have to understand where your reasonable profits are. So closing the cup, that's where you need to be cautious. Your first caution. The 5, that's your next or the blue, that's your next caution, and then the 5 is your next one. So look, we had 2 options earlier today. It was either going to be this right here is going to play out, or we're going to stay in blue. Those are the 2 options. So we never broke the blue, so it had to be, we never broke above blue. Therefore, it had to be this one. All right, let me, I hear you guys. Give me a second. Nah, Lee, hopefully you're monitoring your trade right now. You should be tending to your stop loss or your stop loss. What do you mean no? Oh, did you already take profit? If you took profit, good. Oh wait, you stopped out before. No. Stopped out up here? Oh, okay. No big deal. No big deal. Okay. Okay. We're gonna review it. If it was purple, break, retest, reject of purple for the win. So for calls, I hope you can see why it's important to get above blue, right? You see the liquidity that's built up. You see it clearly. So it's very important you get above blue. And then you want to wait for a break and retest. And also, let's say this thing shoots up right here. Come on now. Look what I just said. Look what I just said. Let's say it shoots up right here. Okay. Okay. Let's say it shoots up right. Let's just pretend that didn't happen. Let's say it shoots up right here, right now. Right? It's still, you look at the pattern here. This pattern is still in play. So don't get fooled that it's just going to go up here and continue. It could, let me, hold on. It could still go all the way back down here like yesterday. So you got to be aware of what to expect. Meaning, if let's say you buy this call here and you ride it up here, don't hold too long expecting that it's just going to continue, because you know what the possibilities are. You have to look out for the same pattern. You don't have to, but it's a good idea. And we're just going to ignore the fact that I said that was going to happen. Look, do you see how I use the liquidity on the bottom of blue? How I see the liquidity in the bottom of blue? I use that same liquidity to have my hypothesis that it was gonna form maybe a head here or a flexion point. How did I know that? Because look, it just happened right here, right? It's not that I'm a genius, it's that it happened right here. So obviously it's gonna happen here. Now this move here, that strong of a move, that was just luck. You can, if you think that was luck, go ahead and you can believe that if you want. Once you understand how the market moves, you'll realize it's not too risky. Because you pretty much always have a 50-50 shot, and if you manage your risk properly, then you have to win the other direction. It's just math. The math has to work like that. You only have a 50-50 shot. Okay, Discord. YouTube's not going to understand this. You will. This is why it's very important we understand our dominant algo. Okay? Because what you have to understand is the moves that you see, you're just moving within a bigger algorithm, right? So it's very important that we identify our dominant algorithm, so we know what we're trading inside of. Therefore, we know the structure that needs to play out for something to happen. It's also one I wanted to tell you guys yesterday, and I kind of forgot because I was talking so goddamn much. I talk too much, but yesterday I was saying I don't know if I got the point across, but I wanted to say we need to identify the dominant algo, because all your moves are just within of a bigger structure. So we need to understand the bigger structure to know what has to happen, where we are within that structure. For example, we get to the top of blue over here. This is a 50-50. It's either going to break blue here, this is the last chance it has, or it's going to reject, and you see what happened on your 50-50. We also had the warning of the lick boxes. There was one above, there was one below, and it started to break below. All right, let's see me form another purple here. I'm giving this a 1 for now. I want to see more. We need to see like we need to see a dance along this purple to make me think we have strength to the 5. Let me clean up the chart just a bit. Okay, so remember, our puts under the 5, right? Break, retest, reject under the 5. Our calls somewhere up here. I'm gonna have to see what it looks like at that time, but it's gotta be somewhere up here. We have to take out all this liquidity. So everyone that bought puts all day, we need to make sure we stop out, right? We got to stop them out and look for the retest and reject to make sure we got the momentum. So basically, if you see like a lot of liquidity built up in your trend, you have a higher likelihood of a breakout. But if it's like a slow grind, look for your retest and reject. Because the retest and reject, tells you all the orders have been stopped out, and now we have the strength to continue up. So break, retest, reject. That needs to happen, or else you don't know who's winning, the bulls or bears. Oh, I cleared this off by accident. And look, when you get more comfortable with trading, you'll understand why this call was a good call. Number one, you're on the bottom of blue. Number two, you're grabbing liquidity off the 5. So this is a good call, right? You just need experience to know that. But you can't hold it too long, right? Because it can easily you're in the downtrend. This is just a quick scout type play. You're in the downtrend. You're still in blue. So being aware of that, you have to trail your stops, take your profit when you can. You're hoping that it just runs straight up. But you have to trail your stops when you're in the downtrend, because you don't want to fight the trend, right? When I'm saying trail your stops, I mean protect your trade. Protect your trade. That's what I'm saying. I'm gonna take a little break. Trade light. Protect this trade. Protect this trade now. You see the retrace? Protect your trade now. Level by level. Go level by level, right? So if you got in on the... Well, let's say you got in here, because there's no way you could have known that. Well, even if you got in here, even if you got in at the worst possible time for this call, you're in profit. Okay, I'm gonna take a quick break. Give me a second. I'll be right back. Don't overtrade. It's Friday. I wouldn't be surprised if they burn everyone's contract out right here. So just be patient. We had our play break a purple. This was a good move here. So we had our play for the day. We don't need to trade anymore. If you decide to, that's on you. But give me a second. I'll be right back. Here, look, whenever I draw the head, this is the most risk, because I don't actually know, right? I just know we're in a downtrend, and I know where the head could form. When I'm drawing these heads like this, I don't know this to be true, right? It's just what's most likely. And it's the flexion point on the shoulders is when your best entry is. So if that wasn't clear, I'm sorry. Let me clear it up now. Okay. Yeah, because our entries are, you know, on the break of whatever, maybe a key level, break of this, break of that, key level. It's never gonna be on you know, I'll let you know where, right? Because remember earlier I said your call's somewhere up here. So meaning if we're down here, you can't have any calls, right? Your calls have to be somewhere up here because we need to take out the liquidity. So just to be clear, I'm not saying anyone did, but whenever I draw the head, it's risky. You got to understand the risk, because I don't know that the head's forming. I'm assuming, I'm making an assumption just based on experience. There's nothing really to tell me that the head's going to be there, because I'm literally just guessing in advance. Not guessing, but kind of. It's kind of guessing, I guess. It's an educated guess. It's an experienced guess, I guess you can say. Yeah, again, we're in blue until we're not. So you can't even think about calls. Minimum, we have to break blue. We can't think about calls until we break blue. And then breaking blue isn't good enough. It needs to break, retest it, and reject. Right? Our entries are on the break of whatever the either key level or the color is. And just to be clear, let's say the call was break a purple. You know, I went over earlier, I consider a 30-cent move to be reasonable enough for you to protect the trade. So if it was on the break a purple, let's say it's 30, so at 0, so at 0 would be a reasonable amount of money for you to protect the trade, right? Somewhere around here. So break purple, 30 cents, you should be able to protect your trade. So I have to consider this, because you wouldn't have lost, right? As long as you protect your trade, you wouldn't have lost. Therefore, any trade you take that you don't lose, I consider a win in the stock market. But I think that has to be reasonable. That, because I'm giving you the chance to stop out without paying any fees, right? So that's why I consider it. If you can stop out in 30 cents from the call, then I consider that a win. So just to be clear, so if I make, we have to have some standard, because I actually don't have a standard. I just go based off of like, well, it looks like that should be enough, but I actually don't have a standard. So now I'm setting the standard. If 30 cents goes by from the break of whatever, and I know you're like, well, how do I know it's gonna break it, this and this and that? I can only do but so much, right? I can just tell you that from the break of this line here to where 30 cents down is a reasonable amount. That's what I'm saying. If you can make it, I don't control that, right? I can't control the speed of your brokerage to take an order, or, you know, certain things I just can't do. But so look, this is 30 cents below. You had time to protect this trade. I have to consider this a win because it's not a loss. And actually, this is in profit. Technically, it's in profit. Not a lot, but it's in profit. You could have made profit. So I have to have some type of standard, because I'm not telling you that you're going to make X amount of money. I'm just saying that it's a possibility to make $1. That's what I'm saying. You have a possibility to make $1, because that's all I can guarantee, or that's all I can, not even guarantee. That's all I can hope for, and I'm just using my experience to guide everybody on the highest probability setup. The highest probability setup to at least make $1. I can do that. Minimum. Minimum. My goal is that you don't lose. That's my goal, minimum. You know, and if we get some education along the way. But again, if we said break a purple and you can collect money, I have to take that as a win. Or at least not a loss. If you don't want to take it a win, fine. But at least say it's not a loss. We knew since early this morning that the 5 was most likely the target. How do we know that? Because I literally put it in the trade chat. Excuse me, in the where did I put it? In the analysis, right? So we already knew that it's going to be a play off the 5 for today. If you're not reading the trading plan for the day, there's nothing I can do for you. in case you haven't noticed, the trading plan hasn't missed. I think maybe one day the market was weird, but it was like a weird market day. But this trading plan hasn't missed. I would say the success rate is probably in the above 95%. Above 95% for our trading plans, which is a pretty good win rate. So you guys have to make sure when you're clocking in to go to work that we review our materials that I'm putting out there, because I'm putting it out there for a reason. Because I'm hoping you guys aren't. I mean, it's fine. Not that I mean, everyone has their own. You're your own human being, and you do what you want to do. But my hope is that you're not. People aren't just here waiting for me to make the call out and you taking the play. My hope is that you're able to do it on your own one day. That's my goal, that you can do it on your own. See, look, if this goes against you, there's nothing I can, you can't really say, oh, well, that play didn't work, because you had the chance to collect the money. And in the stock market, day trading like this, a 30-cent move is a good move. I mean, I'll just be honest. It's fine. There's nothing wrong with that. If we have in our mind that a certain dollar amount on a trade, that's not realistic, because there's no way you can know. That's no one can know. You can average. We average around. I average this week this much, or I average how, depending on your contract size, things like this. But there's no way to know how much you're going to make in a day. So you shouldn't have that expectation. But you need to have like a weekly, monthly average. I think that's most important. So as you can see, the market respects the structure. Nothing much has changed. We identified purple. Purple hit twice. The only call options were blue. So blue never hit. I think we did a little test around here for calls, right? But whatever. Yeah, we're thinking that the 5 is going to be the target, right? So wherever this is, the head, I'm trying to make it on the 5. I'm trying to assume where it's going to be. I knew this one was going to hit because it was on the blue. But now this head has to be on the 5. Wherever the 5 is where the head's, where I'm trying to make this head. So if that shifts over, then I'm going to have to shift this over too, right? So we'll let it play out. Shift this over. So now that more liquidity is built up in blue, if it does break, you can see why it's important for the break and retest. Watch. If it does break blue, you see why? You see where the shoulder comes down? Right here at this level. So if it does break, it's reasonable for a deep pullback. Is everyone seeing that? Does everyone see that, what I just drew? or what I'm talking about, why we wait for the break and retest, we have to line it up with this other shoulder. So if it does break here, sure, you may get this first move. Here's the retest and reject. This is a good visual of why it's a good idea to wait for this, and why if you go in early, you got to take profit early, because you're hoping that it shoots up, but you have to protect against the pullback. And if it does pull back, you can always get back in. 84% rule, right? So if your first 84% rule states, if your setup, meaning the break of blue, doesn't hit the first time, 84% of the time, statistically, if that setup presents itself again, meaning the break of blue, it'll hit the second time. 84% rule, that's what that's called. So now you got some statistics to back up some of your trades. I'll be right back. Trade light. Really quick, if you're if we've been doing this for only a few months, wait for whenever I make the call outs for like the head to form, or you know, a quick scalp right here, or sometimes I'll say like, what is it called, a revenge call or a revenge put. I would prefer the Discord members to wait a little bit until you get a little more comfortable with the lottery ticket gambling type stuff. Just wait, use the right shoulders. It should always be a right shoulder. We always want a right shoulder, or a handle, right? We always look for a shoulder or a handle. The heads, that leave that for a little bit. Just get a little more comfortable with the strategy first. So yesterday my computer was messing up. Yeah. So statistically, this could just be tribal knowledge, but I know I've heard it so many times that I just believe it. I'm actually going to look it up. So I'll look it up before I say it's true, but it's a thing like that 84% of the time, that if you take a trade and it doesn't work, 84% of the time, if the setup presents itself again, it'll work. So, you know, how true that is, I don't know. What I do know is that it's kind of true. It is kind of true, actually, because I'm actually at 100%. The 84% rule for me is 100%. It's never not worked. That's what I can say. It's never not worked for me. But break of this purple, break of purple, that's our call out, right? So our strategy works. Our strategy works. And look, you see, okay. So for this right here, you see why I'm saying we need to wait. It's a better idea to wait for a break, retest, reject. You know, this is the ideal setup. Now, if it breaks it and shoots out without you, nothing you can do about it. But if you want to play safe, this is what you're looking for, right? And it's pretty much the same thing on the break of purple. So if you look at the break of purple, it's the same thing here. So look, it broke purple, same thing here, right? It's just the other way. Broke purple, retest, reject, same thing. Oh yeah, I was around this time, I was ready to go long. When I saw this right here, I was like, okay, this is actually a perfect setup, right? So yeah, I said it out loud. I'm like, my bias is this. And even over here, I still had that bias. I was like, man, this thing, I was almost convinced that it was going to go. And then, you know, once I saw it rejecting underneath this key level, I was like, well, I think I'm just holding on now for no reason. Even though it broke the purple, I was still like, man, I don't know. I was still convinced of the up. But yeah, I mean, we all have bias. We're all human. No one's perfect. Wait a second. Hold on. Also, but wait. Hold on. Before we go talk about the bias, we also stated the first thing in the morning that this was going to be a practice day, that I'm not going to trade. So, you know, because I was on the paper, I was like willy-nilly. I didn't really care. Not that I didn't, yeah, I actually didn't care. We're paper trading. I didn't care. We're testing the 2-minute. So I'm not going to say like this was my actual analysis. It was my analysis from using a 2-minute chart that I don't normally use. But I am being honest, you know, if it was here, I think even if it was still here, I still did have a bias, but only because I knew I was paper trading. If it was money, no, I'm not gonna have a bias. If it was, I would let the price tell me. I would just wait for whatever the setup is, right? So if we're being disciplined and structured, no matter what, win, lose, or draw, I would have to go in on the break of purple. Right? If we were actually trading, win, lose, or draw, I would have to go in on the break of purple. Or I would have to go in on a break retest of blue. And also, again, so I'm trying to show everyone the pitfalls, what to watch out for about the test of 5. I think we're touching the 5 right now. I'm trying to show everyone what the pitfalls, what to watch out for, and I always tell you, don't trade my risk tolerance. And again, let's say that my bias was to the upside. Let's just say, because it was, so we didn't even have to say it. Let's say my bias was to the upside. But you know that the entry is on the break of blue, right? It doesn't matter what my bias is if the entry is on the break of blue, right? So it doesn't matter. My bias is confirmed once blue happens. Now, unfortunately, because I'm human, even when we were around here, I still had this bias. But I did say, and we can rewind the tape, go back and rewind the tape to exactly probably around this time right here. At 10:32, I said, if we reject underneath this key level, then it's the other way. I'm going to think the other way. So rewind that tape so you can get a good idea of what I was saying, because I never, either way, the blue was still our call entry and purple was, yeah, we have this. So purple was our put, blue was our call. That never changed. We still have our 5-minute. But you're right, I did have a bias. But don't go off of my bias. The reason why I'm teaching you guys is so you can form your own opinion. Don't form my opinion. I'm teaching you what to look out for. We knew blue was the call entry. So whatever your bias is here is irrelevant because blue was your call entry. So this is, see, now look, if we touch the 5, which it looks like we did, you better believe there's going to be a bounce. We went over this the other day. Whenever the last time I touched the 5. You better believe there's going to be a bounce before it breaks through. It's very rare that it touches the 5 and goes straight through. Very rare. Not impossible, but rare. So I'm trying to teach you probabilities. So I'm trying to stack the odds in your favor. So it looks like we're trading in the lower half of this half channel. So if we break, retest, and reject the 5, that's good liquidity. But again, measure risk to reward. So if that happens, where's your next key level? Right here. 39. So measure risk to reward. And this cup is going to close. Watch, let me show you. Oh, sorry. Hold on. You see the cup right here? The one that I drew way earlier. So hopefully this happens underneath the 5. Very simple. One of these two things is gonna happen, right? Trust me, or don't, whatever. One of these two things. It's gonna stay in blue, or it's gonna break, retest, and reject below the 5, or break above blue. It can only be. So blue is the key here. So our puts, our safe puts, break, retest, reject under the 5. Our safety calls are going to be something looking like this, right? Above a minimum above the blue. Hopefully a break and retest. And then we're also watching out that we don't stay in the range. Look at the 30-minute, the range. We broke below the range on the 30-minute. So if you were doing the 30-minute range play that I always put up, you're in profit. From 6109 to where it is currently 660.76. So that's a good move. That is a good move. So more than one way to win today. We had our trading plan, which says we're going to make a play off the 5. We had our break a purple, which were puts. And then we had our pink range for our safety range for the break a pink. So that's also a winner. Three ways to win today. If you're interested in learning how to trade like this, send me an email to LiveSPYTrading@gmail.com and I will get you sorted out. So I put the put off, waiting a bit more. Original buys are going down. No. Don't listen to my buy. I was just saying, like, you know, what does everyone think? Because we don't know. I was taking a poll. Yeah, I was just taking a poll. I don't know what the price is gonna do. If the price broke blue, then I would have went up. I know that for sure. If we broke out of blue, it would have went up. And this was a really good setup for a cup and handle. Just gotta wait for blue. That's why we always wait for our confirmations. If you wait for your confirmation and it doesn't work, then that's fine. Because hopefully you had an educated reason on why you took a trade. If you wait for confirmation. But if you're not waiting for confirmation, then you don't have a system, you don't have a strategy. You're just gambling. Okay, so there's 3 ways to play, right? We have our trading plan, we have our day trading algorithms, and we also have our range. The range has always worked. Since I started putting up these pink ranges, we call them the safety range. Since I've been putting up these pink safety ranges, they've worked every single time. The pink safety range is actually 100% profitable. Okay, so we close the cup. We're about to close the cup here, so expect a bounce, right? If it doesn't happen, it doesn't happen. But a smart trader would expect a bounce. That's what I'm trying to say. I'm not a big fan of this green, but we'll use this green. I'm not a big fan of it, though. If we were doing the MACD, look, it crossed below over here. It crossed below, never went back up. No reason to get out of the trade because it never crossed back above. I've also taught this method, right? We've been going over MACD past couple weeks. So It went under right here at 1024, right on the rejection. And Bob's your uncle. This is a winner on break of purple. So actually break of purple lined up with whenever it went below the water. And that's probably not an accident. That on exactly when it broke purple, is when it broke the zero line. That's not an accident. Okay, underneath the 5, profit target hit. Let's see if we get a bounce here. Because look, sorry, it should be like that. Let's see if it bounces. Okay, play off the 5 as we had planned from early this morning. Maybe a little bounce right here as we expected. Why do we expect a bounce? Because the cup closed. It wasn't a guarantee that there was going to be a green candle here, but it's, you know, it's a good idea to think that it's going to be a bounce right here. It's not guaranteed, but it's more often than not. Now we're going to see if the liquidity grab off the 5 is going to form a head, or if we're going to form our next flexion point for the bolt down. So let's see if we form. We want to form some type of liquidity box here, and then we want to trade inside this liquidity box for a little bit, and then look for the microstructure that tells us we're going down. That would be ideal, right? That would be the ideal setup for this continuation down. Maybe a little dance right here to show that the orders are being settled. Give me 1 second. I'll be right back. Give me 1 second. I gotta take care of something. Don't overtrade. You know what the setup is, right? Calls above blue. That's the answer. Above blue, calls, break, retest, reject. Underneath the 5 for puts. You need to see if we're gonna grab liquidity from this 5 to shoot up, right? And then on the break of blue. So just be patient. Hold on. Let me I gotta do something really quick. All right, we're touching the lower limits of this, so you know, are we doing this? I'll be right back. Don't overtrade. I'm going to take a few minutes here, so give me a second. Look, do you see how we always know what to expect? When you understand the market structure, you know when the cup closes, there has to be a bounce. This is how we manage our risk. This is how you know if you want to take profit or if you're going to hold and be a gangster and hope that it continues. This is, I'm trying to teach you this, how to manage the risk. So you know where to, you know, your most likelihood, right? So it went from break a purple to the blue, and then to the 5, and then to key level, and then we knew it was gonna bounce. So none of this is a surprise. I'll be right back. I'm sorry, I talk too much. Give me a second. So look, the reason why it's important to form a handle for continuation down is because we have to protect against something called a double bottom. So a double bottom, I'm gonna go to blank space, is like when the price goes down, touches, comes up, goes back down, and then touches, right? So this is a double bottom. What we're thinking is that it's gonna do this. The price is gonna come back down. So that's why the handle's important. So to avoid a double bottom, watch for the handle formation. All right, I hear your messages. Give me a second, let me read it. So at this point here, you have to ask yourself, here, let me clean up this chart. It looks crazy. You need to ask yourself, what are the setups? Are we forming this head and shoulder, or look for a rejection on the lick box here. See this lick box? look for that rejection. Or if we get above, look for continuation. Very simple. Very simple. So you see where your entries are, right? Below the 5 on a break and retest, or above this blue. Very simple. You don't have to think too hard. Look at the MACD. Look at the MACD. Now be careful because we're far below the water. We're very far below the water, so you don't want to have you don't want this handle to form on you right here. So if, like what I'm saying is, if you're in calls expecting this, what is this? This head and shoulders, inverse head and shoulders. You know where the risk is, right? You see where the risk is. There's nothing more I can do from this point. You're at a 50-50 right here. This is a 50-50. You see why? Because it's either going to reject here or it's going to continue up. This is our thesis, right? If it doesn't happen like that, then it doesn't happen. But we know where our trade entries are. If this doesn't happen, then it doesn't happen. There's no entry. But this is where you are right now. You're at a 50-50. We can either bolt down from here or create a shoulder. So we don't know. We're at this flexion point. Wait. Let's see. Let's use our... So on the 5, we may be starting... this 5 says it still has some room for the down, to be honest. But we'll see. This 30-minute looks like it has room for the down. The 30-minute says kind of sideways. The 1 minute, it's so far below the water. Remember, when we're this far below the water, the price has a hard time. Well, they're both facing the same direction. Now they're both facing the same direction, so we'll see how this goes. We know what we got to look out for, right? Look, we know exactly what we need to look out for. Remember, today was supposed to be a play day. Now pay attention to the MACD and the candles. It'll tell you what's going to happen. So here's what you need to be thinking. We're far below the water, and you have to imagine that when we're below the water, if this blue crosses below the water, then we're most likely having continuation to the downside, right? So if we have continuation to the downside, would that align with our cup and handle? Would continuation to the downside, if this area right here, you see the area up here, and I look down here, if this turns out to be a weak bull cycle would give us continuation down, right? And then when the bear cycle comes, expect some strength. So this is what you're looking out for. I'm giving you the answers right now. This is the answer to the test. Now, it may be ugly. It may be bouncing up and down. I can't control that. I can't control, certain things are just beyond my control. But I can tell you what needs to happen. So ask yourself, if this handle is going to play out, what should the MACD be looking like? If this handle is going to play out, what do the candles need to look like? Maybe the candles need to look like... Here, let me clean it real quick. So now that you're in the lick box, right? We're in the lick box. Maybe the candles need to look like maybe a head, a shoulder, and another shoulder, right? Maybe this is the micro for the down. This is what you need to start looking out for. And then once you get below the five, if it's gonna happen, should be your other right shoulder, right? It should be like that, under the 5. If it wants to head down, this is what you're looking for, right? This is kind of what you're looking for. If this doesn't happen, then there's no trade. And then the entry is on the right shoulder. Or let's say the break, retest, reject, but it's always gonna be on the right. It's never gonna be on the head. The head is the risky play. It's always going to be a right shoulder. Inverse cup on the 5. Let's see. 5. Inverse on the 5. Are you talking about this inverse cup and handle? This one? I'd probably give this handle probably give this handle that much wiggle room. If it goes above this, I don't think it's I think maybe the structure broke. Or, you know, probably blue would be the best, right? A rejection of blue would probably be the best for the handle. So yeah, maybe the handle could go up there like that. So if we overlay the 5, and if we know we're in blue and we got to break blue, and if we overlay that on our 1, so I think we should give the handle formation all the way up to blue. So maybe we should give this lick box that looks a little bit better. It's a little overlapping, but I think it's fine. Clean up the chart. So look, it tested this top area, second bite at the apple. I got a doctor's appointment here in a little bit, so we'll I got a few more minutes here with you guys. Let's let this play out. Here's something I want us to take into consideration as well. Listen, let's say you got in on a put here, right? On the break of purple. If you're below the waterline, if you're below the water, if your MACD, this orange line is below, hold the trade. Don't get out until it goes back above the water. I'm not telling you for sure to do that. I'm just saying it's a suggestion. You know, just because it's close, you'll notice that even when it looks like it's going to do something, as long as if these have even a smidgen of a gap, that's enough to give it strength to move. So wait for the actual cross if you're using MACD. You get a higher probability of success if you wait for the actual cross. Because sometimes it'll look like it's about to cross and maybe stop you out, and it'll just open right back up. So you got to wait for the cross. I kind of like this little movement here. I wasn't paying attention, but I like this little movement. This little quick down up. And it also coincides with the movement right here, right across from it. See it? So this makes me believe we're taking, this little movement makes me believe we're taking out this liquidity here. See it? On a very small scale. That's all we're doing all day. Once you understand that, this all gets much easier. Look at the pattern here. Look at this pattern. Look at the pattern. You see the same, because we have the liquidity built. Look, that's not an accident. This is on purpose. You got to be able to spot these things. Now the reason why we're waiting, because we know the liquidity is built up here. So because we want to wait for a break and retest, the reason why is because we don't know if someone right here has $500 million in puts. We don't know that because look where the liquidity is. So because we don't know if the $500 million in puts are right here, we can't make a trade here yet. This is our 50-50. We'll get confirmation once we get a break and retest. Wait for the break and retest. You know the liquidity is in blue. Blue is your liquidity. This is your trend. This is our dominant algorithm, blue. Every move on the break of purple is within blue. So once we finally break blue comfortably and make blue support, then you can think purple's gonna take over. Or it may be yeah, purple, maybe purple. I like purple. It may be it may be one with a not so steep angle. It may be like, you know, maybe a little more horizontal, not so steep, maybe a little more horizontal. Normally, I would have probably tried going in when going above blue, if chase. So this blue technically is an entry as well. It is an entry, but remember, I have the confidence levels, right? So the confidence on this one is a 2. And it's only a 2 because we're in a tight range, because I know the range is here. But technically, this blue is... right? It's going to be the break of whatever, but the risk, you have a higher probability of a win up here because you know you've taken out all the liquidity, and then you just got to wait for the pullback for the orders to settle out. So yes, Ron, technically, you know, it is here, but this is the risky one because see, you need to know you broke all the liquidity because it's all a liquidity grab. clean up the chart just a bit. So our safety entry, so if you're to take this, that's on you, right? I'm telling you, these are probabilities, possibilities. Our best probability for success is going to be something like this: a break, retest, and reject of blue. That's going to be our best probability of success. Now, if it breaks blue and shoots out, then you miss it, or you took it. But I'm telling you I'm not telling you how to trade. I'm explaining to you what the risks are of each setup. That's what I'm doing. So just like over here, where I had a bias of breaking blue, that it was going to break blue. Why don't we just wait for blue to break? Why don't we just get the confirmation to know that this trend is over? That was a crazy picture. That picture you sent was absolutely crazy. Okay, so we had the head. It looks like that head formed here. So now we're thinking, okay, now that we got the head here, we see some strength building up. Now we have some reason to believe we have some upside potentially coming in. Right? We have maybe a head here. We see a little bit of strength building here. We see we're breaking some resistance here. Now we need to see higher highs. And then the next higher high is going to confirm the break of the trend. You get it? See, higher high. We need to get a higher high now, right? Because we're still in this downtrend. Until we get a higher high, we're in the downtrend. Very simple. Don't overcomplicate this. And look, you see the liquidity on blue. It wouldn't be crazy to expect a little pullback on blue. And a pullback to where? Maybe this last liquidity down here. This is not, out of the possibility. You have to look for where's the possibility for a pullback and where's it going to pull back to? You got to keep these in your mind. So when certain things happen, then the probability of a direction, whichever one you're deciding, is either increasing or decreasing, meaning the price got to here, which lowers the probability of this move, or price got to here, which increases the probability of this move. We always got to be thinking ahead, be ahead. So you don't want to be caught behind the 8 ball. And if you notice, whenever I do like the videos, I haven't done a video in a while, the end of day videos, I never really add the head. I always do the break of blue, or yeah, I never add the head. It's always a shoulder. All right, see what we got here. We're above the water finally. The legs are spread apart. We're testing our liquidity. We are testing our liquidity right now. Correct. If I left an emoji by Lee's comments, those are valid points. Those are the answers. Whatever she's saying are the answers. I'll do the lick boxes. Hold on. This lick box here was copied from over here. I'm just trying to give a visual of what we're looking for, right? So the shoulder, if this is the head right here, right? The shoulder is right here. That means the other shoulder should be here. All right, so now we're gonna test it, right? If you go in on blue, let's see, is blue going to, did we build up enough liquidity here to break straight out, or is it gonna break and retest? This is where you need to figure out who you are as a trader. This is the time right now, Ron. So take this time to practice to see what would happen, and then now you know what to expect, or you have an expectation for the future, right? This moment in time right here. So we're just practicing now. Remember, our entry was break of blue. That's our entry. So ideally, you would have got in exactly on the break of blue. Now, is that possible with certain brokerages? I don't know. I can't control that. What I am saying is this is the ideal entry, right? So the price is now above it. If your stop isn't on blue, there's nothing I can do, right? You put it on, here's one strategy. You put it on blue, and if it goes against you, you lose nothing. This is the strategy, right? If it shoots out, then you win. Now, here's the other option. You put your stop on blue, it goes against you, like I said, you lose nothing. And then if it breaks blue again, 84% rule, then you take the win. Okay? So 84% rule back in, or here's your other option, you hold. You let it break, and then you hold for the retracement. Those are your options. You got three. You stop yourself out short, and you get back in, or you hold for retracement. This is how this works, Ron. This is it. This is the whole bread and butter. This whole thing we do, it's right here, right now. This is the shit. So your trade is literally protected right now. You can protect your trade. So if it goes against you, you lose nothing. And then you can always get back in. And the way and the reason why this is beneficial is because you'll increase your wins, and then when you do get the home runs, you don't have to worry about retracement at all. And you stop yourself out for profit every time. Or break even. That way, you're pretty much not guaranteeing, but you're increasing your chances of the home runs to win, and you're decreasing any drawdown. If you immediately get in on the break of blue and put your stop on blue, or even right above so you can collect fees, you can't lose from here. Now, if it goes against you and you get back in, then you get back in and you win. Or if it shoots out straight, then it shoots out straight and you win. Or if you want to leave a little bit of a drawdown, so then you go a little bit inside blue, but this is how it works, Ron. So look, right now, you can protect this trade. So if blue was at 85, so 105 is 30 cents. I would consider this. You had enough time, you had enough room to protect your trade. So it's not going to, if it goes against you, you don't lose anything. So remember, 30 cents from this point, I consider that safe. Like you could have stopped yourself out before it went against you. So 84 to let's say 10 or 11, you had time and enough movement to either take profit, to either set your stop so it doesn't go against you. So this is why I'm saying it's really hard to lose twice in a row, because look, if you took the trade, even if you you still could be taking the trade and stop yourself and put a very tight stop and not lose anything. But, obviously it's on the break of. So the break of blue, this is how it works. This is the strategy, Ron. Pay attention right now what I'm saying, because this is just it. So it's either gonna break and shoot out, or it's gonna retest blue and shoot out, or it's gonna fake out. So option one, it goes straight up and it leaves you behind, or you got in and you're happy with life, right? That's option one. Option two, it breaks, retests, and rejects. That's option two. Option three, it fakes you out. How do you protect against all of these outcomes? How do you protect against all these outcomes? Easy. You put your stop right here. You're protected on blue no matter what. Now, if you're brave and you want to hold for the retest, that's on you. That's on you. If you want to do this where you stop yourself and you can, I'm telling you, you're going to increase your win rate by doing this, and you're going to reduce your drawdown. Now, here's the bad part. You're going to get frustrated because you're going to stop out and your winners, and then, you know, that $1 stop out, and then it's going to go $50 the next direction, and you're like, oh my God, why did I do that? This is something you got to deal with. There's no way around that, right? So either you're going to be brave and hold, or you're going to be a pussy and take your profit. But whatever it is, whatever you decide to do, those are just the options. There's nothing you can do about it. There's no workaround. It's identifying risk. There's no workaround for what I just explained. And there's no 100%, this is always going to be the thing. That's just not a thing. I'm telling you how to protect against whichever happens. So look, the break of blue was our entry. Like, this is where you go in. You see what I'm saying? Could you have gone in here? Yes. But, I know we're in the downtrend. If we break blue, I know we're most likely breaking this downtrend. So look, even if it does go against here, you had time to collect your profit. Even if it does fake out and reject, you had time to collect your profit. This is what I'm talking about. If you let this go against you from here, there's nothing I can do. There's nothing I can do. Or if you're willing to hold, look at the pattern to see if we get a weak bear cycle and you're willing to hold, and maybe this weak bear cycle does this right here and doesn't even test your blue, then fine. But I'm telling you the strategy right now. If you can hold, then hold. All I'm simply doing is telling you where you can make $1, where you can make $1. Anything past that is God's benevolence. All right, I'm gonna go read what you guys are typing in there. Now look, do you see what needed to happen for this? Once this happens, then, because look what we said, we needed this for our cup. So once we get past a certain, for our handle, once we get past a certain level, okay, watch, 61.53. We're gonna go to 61.53. Look where 61.53 was, right on the top of our lick box. Look, I'm not making this up. 61.53 was exactly on the look. The exact top of our lick box. Okay? The conversation is over. We have a winning strategy. It works. Exactly on the top of the lick box is when we decided that this was no longer valid if it goes above, and it worked. Matter of fact, we even gave it a little more room and said blue. That's what we did. We said blue, and it worked. So the strategy works. And if you remember from when I said way over here, I said we also have to watch out for the same pattern, right? This same ugliness. It could get ugly over here. Now, if we form support right here, it's probably not going to get ugly down here. So trail your stops. Don't let the market take anything from you. We know what to look out for. It's going to grab liquidity from here, retest this liquidity, and bounce off. If that's going to happen. If not, it's just going to grab liquidity from here and bounce off from here. You know what the strategy is. Let me go read the messages. Okay. Good. Yeah, me too. I take my profit too. I'm a pussy. I take my profit. I don't care. I'm a pussy. Okay, look. Also on the 5-minute chart, the 5-minute hit. So the break of blue on the 5. I think you can even probably see a break and retest on the 5 actually. If you look at the 5, you see a break, and then you see how this candle actually comes down to touch the blue again. So break, retest, and a reject off the 5 on the blue. Today was a pretty good day. I mean, the algos held up. Break a purple, break a purple, break a blue. So we didn't have the retest earlier. So is this a bit like a B setup, or can call it more risky, even correct? Okay, so let me read that again. I want to make sure I read it properly. We didn't have the retest earlier. So is this a bit like a B setup? The retest earlier. Oh, you're saying retest on blue? Is that what you're saying? Retest blue? Retest after breaking out of the liquidity box. Or blue, sure. Well, yeah, it hasn't happened yet. We don't know if it's going to happen. So the two things are going to happen, right? Because remember, every move is a liquidity grab. Every move is liquidity grab. So look, we grabbed the liquidity from here, broke out. Now we're going to test this box. So we're testing this box. The liquidity grab we're going to see is if they're going to grab liquidity from this box right here. You see the retest of this box lines up with the blue, with the retest of blue. So if it retests and reject, that's a possibility, which would line up with our head and shoulder theory. Remember the shoulder over here, the head right here, and the shoulder right here? You see this box? This box is literally copied from here. It's just a copy. I copied it and moved it over. So if we form support here, that means we're grabbing liquidity from up here. So it may not need to retest this if we grab the liquidity from here. So we made it up here. We're going to see if it forms support here to grab liquidity from up here and then push off. Otherwise, it's going to grab liquidity from, it's going to retest this lick box down here, which is also on the blue, to grab liquidity. If it gets below, back inside blue, underneath this lick box, you better think the other way, right? That means this is a stop hunt. Or a fake out, rather. Yes, deep structure, good. We always, there you go, deep, see? And then that creates our deep structure, good. And now you have momentum. Once you see the deep structure, now you have momentum, and now you can have confidence in the next play. It doesn't have to look pretty, because you have confidence, you see the momentum, you see the right shoulder. Look, so are we building support here, right? We want to see if we build support here at this level of liquidity. You see, Ron, you got to take it level by level. So we have level by level of liquidity box. We have level of algo, and then we have level of key level. So there's a couple different levels to take into account. We go level by level. So our first level is going to be our structure. Let's say the head. Our second level is going to be our what is this? Our algo. Our next level is going to be our lick box. Our next level is going to be our trend line. Our next level is going to be our liquidity, what is this? Key level. So it's level by level. That's how you do this. You don't just say, I think it's going to hit up here. You don't say, we're at the 5, I think it's going to hit here. You can't do that. You gotta, I mean, you could, but you gotta trail your stops accordingly. Another thing I want you guys to pay attention to is, usually this works. It didn't work. Actually, it did. Whenever you see an aggressive, abrupt right angle kinda on the MACD, that shows you a moment. It's basically a momentum candle. So whenever you see an abrupt right angle, you see it's kind of like, here, let me show you, see if I can draw it. You see this angle here, how sharp it is, and the angle here, how sharp it is. Whenever you see those angles, If it like all of a sudden just cuts, that's probably a momentum candle and it's something to pay attention to. Pro tip. If you see a sharp angle in your MACD, well, that I exaggerated there. That sharp angle, that should tell you something. Okay, I'm gonna go back and check the messages. Give me a second. Just let me clean up this chart. Okay, where are we? Yes, correct. Correct. Three different levels. That's how we have to do it. That's how we have to do it because it works. We have to do it like that because it works. Now, look, I get it. We could have taken this trade here. And I always tell you guys, if you're taking these are your own risk. My callouts are the highlighted ones. I'm not saying that these aren't going to hit. I'm saying the risk is higher here. That's why I highlight it to let you know the risk is less. It's less risk up here. Look at the play. This is an ideal break of whatever, right? So when I'm saying break of this is it playing out right now. So everyone should be in profit at this time. Everyone's stop loss at this point should probably be right underneath me personally. This is what I would do. You guys are going to have your own tolerance. Maybe you want to go underneath the last pullback, right? See the pullback right here? Maybe you put your stop here. I don't know. I would be putting it underneath this 62.18. Me personally. But this is a strategy. We go in here and now you know what the setup is. It's just this simple. Correct. There you go. You see the support right here? Boom. Perfect, Ron. There you go. It comes in chunks, Ron. It comes in chunks. It doesn't just like, because on certain skills that we attain, it'll just all of a sudden like, oh shit. Like the lightning bolt went off in your head and you just get it. The light bulb went off in your head and you get it. But this skill is different. It comes in chunks. You gain concepts in chunks. And that comes from repetition, seeing the pattern play out so many times. It comes in chunks. And the reason why it comes in chunks and it takes time is because you need experience sitting here doing this to see the patterns. That's the only reason why it takes time. Give me a smooch. Look, see, this is a beautiful play. Beautiful play. We needed to look at the liquidity in blue. We had to clear the liquidity. And you better believe it's still not out of the realm of possibility to test this blue again. Why? Because look it to your left. This is the actual shoulder. So ideally, we'd like it to mimic this. Ideally. I'm just telling you what to look out for. So if your stop is, now that we're, firmly above 62.18, if you want to be right above 60, because remember, we were below 62.18 before. Now I'd probably move it right above 62.18. And then I see the price starting to curl down. Maybe I'm thinking, okay, it's a good time to tighten up the stop. But you also need to be thinking now, am I going to get a weak bear? Right? This is where I recommend to, if we're just starting, you take your profit here. You take your profit when this crosses, or whenever whenever this buying channel gets cut. I need to make a new buying channel. So single contracts, you should be taking your profit when the guardrail gets cut. You got to take your profit when the guardrail gets cut. And the reason for that is because we have to protect against this pullback back to blue. Unless you're a gangster and you're like, you know what? I got this. And you're willing to hold for this deep pullback, then fine. That's on you. I'm telling you what the risks are. So if this liquidity is good enough to shoot up, then we gain support here and just shoot up. We don't need to retest down here. So let me repeat that again. If we gained enough liquidity from the key level, then we don't need to test the blue again. I'm going to repeat that again. We got above blue. So this blue liquidity was enough to get us to where? The key level. Okay, cool. Now we got to the key level. The next question is this key level liquidity enough to get us to the top of to the high of day? Which that literally just happened right now. You see how we go level by level? And now we want to see this up here form support above our lick box. Look how perfectly it touched the top of the lick box. This is not an accident. This is not an accident. So I'm telling you, we're going level by level. I hope you're seeing it happening right in front of your face. And look, single contracts, you're still in this play from the break of blue to the break of magenta. There's nothing wrong with this. This is an amazing trade. This is a perfect textbook trade. I've done my job. Now it's up to you guys to start trusting this. Start trusting this. When we're in the trade, use some of the other tools that we have at our discretion to decide, are we going to stay in or is it time to get out? Use the market structure to understand when a play is over. Right? Use the market structure to understand when a play is no longer valid and you have confirmation. We have to start trusting this system because we sit here and we do it every day. And you see, every day I post a win. Oh, well, not a win, but we post our wins for the day every day. So the system has to work. We just need to refine our execution. The execution refinement will come through experience. You're going to say, last time I saw this, I stopped myself out for no reason. Last time I saw this, the price kept going and I didn't take the trade. The experience we're gaining is invaluable because it always comes back to get you in the long run. The experience is going to help you in the long run. Don't let this short-term learning, you got to learn. And it takes money to learn. This is just a fact. It doesn't matter what business you do. If you have a car wash business, if you have a laundry business, whatever business you do, you're going to have expenses. So if we're learning and if we're taking the loss and learning from the lesson, then that's just the cost of doing business. This is a business like anything else. And you can't say, oh, I took a loss, this is a shitty business. That's not how it works. Because sometimes it rains and people don't go out, but businesses stay open. Right? They stay open and they have to run their lights and they have to run their water and they have to pay their employees and they take the loss for the day. So once you understand this is just business, we're managing our risk. Just like any other business. Now we have to learn how the market breathes, how the market moves. We have to learn to control our emotions and let the strategy work for you instead of working against it. And instead of trying to think, how is the strategy wrong and trying to prove it wrong, we're wasting time on trying to prove it wrong because we have since goddamn January of this year to prove it right. So let's use the data that we do have instead of speculation and trying to guess and trying to assume. Why? Break a blue, break a purple. It doesn't get any easier. Do you see the easy stuff works. Once you start complicating it and you're adding in too many ideas and things. Why? For what reason? It's very simple. We break blue and we wait until we break magenta and then we get out, right? Single contracts, then you get out. We're still in the play. Look at break a purple, break a blue. Let's not complicate it. And I'm teaching you strategies on how to protect against stop hunts, how to protect against significant drawdown, meaning don't be afraid to put your stop exactly where your support level is. If your support is let's say your blue is your support, then put your stop on your support, right? Maybe, $1 or $2 below, because that's where they like to target. Maybe now would be a good idea to stop out, right? Because you see it heading sideways now. Take your profit. Who knows? We're still high above the water. This could be a weak bear and travel up. I don't know that. But what I do know is that you could have made $1 if you took a call from the break of blue. This is all I can guarantee. This is all I can tell you. Whatever expectation you may have of the stock market or of me or of my ability, I'm going to set the record straight. What I'm here to do is tell you, you could have made $1 on the break of blue. And if that sounds disappointing, that's the reality. Right? That's the reality of it. I'm not going to sit here and lie to you. This is the reality. This is our business. This is what we do. Again, remember, you see this? This is the same box. We have to watch out for this. That's why you don't get greedy. You take your profit. You can live to fight another day. Let's say it comes back here and retests your support. Then you live to fight another day. Let's say it turns into a weak bear, right? A weak bear cycle, and you buy your call again. Now that you're above the water, when it goes back into a bull cycle, hey, your odds are high you're going to get something out of it. Did everyone just hear me? If this goes back into a bull cycle while we're above the water, your odds are very high that you're going to be able to collect something. Don't get greedy. You see the tight range we're in. You see the tight range we're in. Do not get greedy. That's all I got to say. It's very simple. And also, I want everyone to understand why it's important. We don't try to make any moves before 15 minutes. And even 15 minutes is still kind of early. We don't want to make any moves before 15 minutes. It's not enough time for direction. So I know sometimes we see just cascading candles in whatever direction and we get FOMO, we want to join in and, oh, I could have done this and I could have done that. That's not how we trade. That's gambling. If we have a real business and a real system here, we're going to allow for data to come in and make moves based off the data. This is how business works. This is how we're going to run this ship efficiently and profitable and consistent. He said, yeah, that's true. He said, with enough contracts, even $1's $1 million. That's funny. That's true. Even $1's $1 million. Oh, dang, I have a medical appointment. I completely forgot. Oh my God, I completely forgot. Okay, dang, I have to get out of here. Let me look at the 5 minute. Shit. Look for, use the 5 minute to guide. Continuation from here, look for a bounce, like literally right here. But then again, you still have till blue, right? So you got to watch out for blue. I can't sit here and do this. I have to go. Damn it. Do you see what? Look, you see the peak of the top of the lick box? What happened here?
It's a pattern. You gotta identify the pattern. I literally just copied this. Look, it's a copy. I just dragged it over. Oh shit, now I messed it up. Okay, I have to get out of here. I'm so late. Okay, I love you guys. YouTube has been a pleasure. You have a good day. If you're interested in learning how to trade like this, send me an email to LiveSPYTrading@gmail.com and I will get you sorted out. YouTube has been a pleasure. Have a good